All right, so today we're going to be taking a deep dive into gold investing.
Gold.
Gold.
Nice.
And more specifically, we're going to be talking about physical gold versus paper gold.
Okay.
The inspiration for this deep dive is an article from Gold IRA Blueprint called Physical Gold versus Paper Gold, which is the better investment.
All right.
And this article was published December 4th, 2024.
Okay.
So it's pretty recent.
Very recent.
And by the end of this deep dive, our goal is to kind of equip you with the knowledge to know the nuances between these two different types of gold investments.
That's a good goal.
So you can make informed decisions.
Yeah, for sure.
So I got to start off by saying this whole paper gold thing is always kind of like throwing me off a little bit.
Oh,
Like,
great.
what exactly is paper gold? It sounds so...
I get that. I get that. It's kind of like well, think of it this way. It's like owning gold without actually having to like store it.
Okay.
You know, so you're not like lugging around gold bars or anything.
So it's more like a representation of
Exactly.
gold ownership.
Yeah, it reflects the market price of gold,
Okay.
but you don't have the physical metal.
That makes a lot more sense.
Yeah.
So the article talks about like a bunch of different types of paper gold, though.
Right.
Like there's futures contracts,
Mm-hmm.
gold certificates,
Yeah.
ETFs, commodity pools, even like stocks and gold mining companies.
That's right.
So how do all of those things fit under this umbrella of paper gold?
Yeah, so it's important to remember each of those types has like its own little quirks
Okay.
and its own risks.
Okay.
Like, for example, futures contracts.
Okay.
Those are agreements to buy or sell gold at a certain price on a future date.
Okay.
So those are more for like seasoned traders
Okay.
who are okay with a little more risk.
Makes sense.
And then you have your ETFs, and those
Yeah.
are traded on the stock market.
Hmm.
You can kind of think of it like buying shares of a company. But instead of a company, it's those shares represent a portion of a gold holding.
So if the gold price goes up, the ETF price goes up.
Exactly.
Gotcha. Okay.
Yeah.
But I think the article also mentioned that not all ETFs actually hold physical gold.
You're right about that. You're right about that. Some of them might hold gold futures instead,
Oh, okay.
or they might hold shares of gold that are owned by banks. So it's like a step removed from the actual metal.
So it's not a one-to-one thing.
Right.
Interesting. Okay. And then what about these gold certificates?
Gold certificates, those are kind of like a historical thing now.
Oh, okay.
The U.S. government doesn't actually issue them anymore.
They're kind of a relic of the past.
Yeah, gotcha.
Gotcha.
Okay.
And then commodity pools.
Commodity pools, yeah, that's like you said earlier, it's kind of like a gold investing club.
Yeah, like a group.
Yeah, so investors will pool their money together
Right.
to make larger gold trades.
Got
But
it.
again, that's something that's more for a certain type of investor,
Okay, and then there are gold mining stocks.
right? And gold mining stocks are a completely different game.
Yeah.
That's where you're investing in the companies that are actually out there digging up the gold.
Oh, wow. Okay.
Yeah.
So with all of these paper gold options,
Uh-huh.
what are like the biggest pros and cons
Okay.
that you see with paper gold?
So I think one of the undeniable perks of paper gold is the liquidity.
Okay.
You know, particularly with ETFs and mining stocks, they can be bought and sold almost instantly.
Oh, wow.
So there's no need to wait for a dealer to like assess your gold bars or anything.
Okay.
It's all done digitally.
Interesting. So for someone who values speed
Yeah,
and efficiency paper, gold is the way to go.
it could be a really good option.
Okay.
Yeah, and you can even find zero commission brokers these days.
Oh, wow.
So trading can actually be pretty cost effective.
That's pretty cool.
Yeah.
Okay. But on the flip side,
Yeah.
what are some of the drawbacks?
Drawback. So one of the things that the article mentioned is the potential for hidden costs.
Yeah.
You know, it's easy to get kind of lured in by the like free aspect of some of these paper gold investments.
Yeah.
But there are these things called expense ratios,
Bro.
and those can really add up over time.
So they're like kind of sneaky.
Yeah, it's like a slow leak in your tire. You might not notice it at first,
Okay.
but eventually it's going to leave you stranded.
Gotcha. Yeah. And I guess another thing is like with paper gold, you don't actually own any physical gold,
Right.
right? So is that drawback as well?
Yeah, it can be.
Yeah.
You know, in a stable market, it might not seem like a big deal,
Okay.
but you know, if there's like a major financial crisis and trust in institutions starts to erode,
Okay.
the value of your paper gold could potentially plummet, even if the price of physical gold is going up.
Wow.
Yeah. So it all comes down to confidence in a way.
Yeah. And what people perceive as valuable
Exactly.
in a crisis.
Yeah.
Interesting. So it's not just about the price of gold.
Right.
It's also about the stability
Yeah.
of the systems
The system's backing it.
that are
Yeah.
backing the investment.
Exactly.
Okay, that's really interesting.
Yeah.
So that's where physical gold kind of comes in.
Right.
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 Like if things really hit the fan,
Yeah.
I feel like that's when people are like,
Yeah.
okay, I need something tangible.
Yeah. I want to be able to hold it.
Yeah, I need something real.
Yeah.
Something that can't just be wiped out
Exactly.
by a stock market crash or whatever.
Right.
So it's more than just psychological comfort.
Yeah, it goes beyond that. Physical gold actually has practical and aesthetic value beyond its investment potential.
Okay.
Think about gold jewelry or its uses in industry. It's a very versatile metal.
Yeah.
It has inherent beauty and utility.
Right.
Yeah.
Okay. So, yeah, I can see why people would be drawn to that side of it as well.
Yeah.
But I imagine there are some drawbacks too.
Oh, of course there are.
Right.
You can't just, like I said, you can't just stash gold bars under your mattress.
Okay.
So you're looking at secure storage facilities or home safes, and that can get expensive.
Okay.
And then you might need insurance to protect against theft.
Right.
And then if you want to sell your physical gold quickly, that can be a real headache.
Yeah, because with paper gold, you can just click a button
Exactly.
and it's done.
Right.
But with physical gold, I imagine it's a lot more.
A lot more involved.
Yeah.
Yeah. You have to find a reputable dealer. You have to haggle over the prices.
Oh.
And they might have to assess the purity of your gold.
Oh, gosh.
Yeah. So it takes time.
Wow. Okay. And then also, I think the article mentioned something about like a markup.
Right. So dealers will often add a premium to the price of physical gold.
Okay.
So you're actually paying above the market value.
Oh, wow. So there's a lot to think about here.
There's a lot to consider.
With both physical and paper gold.
It seems like both have their own unique advantages and disadvantages.
Yeah.
And like you said earlier, it really comes down to individual circumstances.
Yeah. And priority.
And priorities, exactly.
So for our listener out there,
yeah,
who's trying to make sense of all of this,
yeah,
where would you suggest they even start?
well, one helpful thing might be to imagine different scenarios playing out in the gold market and thinking about how each type of investment would perform. For example, what happens if gold prices suddenly skyrocket due to some unforeseen global event?
Ooh, that's a good one.
Yeah, like a currency crisis or a geopolitical shock.
Yeah.
Something that sends investors running for safe haven assets.
So if that were to happen,
yeah,
would our paper gold investors be celebrating or would they be biting their nails?
Yeah. And what about our physical gold holders?
Right.
Would they be sitting pretty or scrambling to find buyers?
Yeah.
Those are excellent points.
Yeah, those are all things that we need to consider.
Exactly.
Okay, so we've given everyone a lot to think about.
Yeah, we have.
I think it's time to take a quick break. Let all this information sink in, and then we'll come back and explore those scenarios in more detail.
I like it.
Stay tuned. All right, so let's dive into these hypothetical scenarios that we were talking about before the break.
Sounds good.
And see how they might play out with physical versus paper gold.
I like it.
Okay, so first scenario.
Yeah.
Let's imagine there's a sudden spike in gold prices.
Okay.
Like a global event happens, a currency crisis or a geopolitical shock.
Yeah.
Something that sends investors
Yay.
scrambling for safe haven assets.
Makes sense.
So in that scenario, what happens to our paper gold investors?
Well, if they're invested in ETFs, their investments should appreciate alongside the rising gold price.
Okay.
ETFs are designed to track the market. So in theory, they should mirror those gains.
Okay, but what if they're invested in like gold mining stocks?
Ah, good point.
Instead of ETFs.
Yeah, because then it's not just the gold price.
Right.
It's also the company's performance.
Exactly.
So let's say there's some bad news about a specific gold mining company.
Yep.
Even though gold prices are surging,
What?
maybe they have some production issues or there's a major accident, suddenly their stock plummets.
Wow.
Even though gold is doing great.
So even in a gold bull market, you could still lose money.
You could.
With paper gold.
If you're not careful.
If you're not diversified.
Exactly.
Interesting. Okay, so let's flip the script now.
Okay.
Imagine a scenario where gold prices are falling.
Right.
So maybe economic stability returns, risk appetite increases, and gold kind of loses its luster.
Loses its appeal.
Yeah. So in that case, how do our paper gold holders fare?
Well, logically, their investments would decline, right? Mirroring that market trend. ETFs would track that downward movement.
Great.
And gold mining stocks, as we've seen, they could be doubly hit if the companies themselves are also struggling.
So paper gold can be pretty volatile,
It can be.
just like any other market-tied investment.
Exactly.
Okay, but this is where I think that psychological aspect of physical gold
Right.
might come into play.
Yeah, because even if the value of their holdings decreases on paper,
Okay.
physical gold owners, they still possess something tangible.
Right. They can still hold it.
Exactly.
So there's that peace of mind.
That sense of security.
Yeah, exactly.
Yeah.
But even in a falling market,
Yeah.
there are still those practical downsides to physical gold that we talked about.
Yes.
Like liquidity.
Liquidity is a big one.
Yeah, if you need to sell your physical gold quickly,
Mm-hmm.
that could be tough,
It could be very challenging.
especially in a falling market.
Yeah, you have to find a buyer at a fair price.
Right.
Which might not be easy.
Okay, so let's up the ante even more.
Okay.
Let's imagine a full-blown financial crisis,
Right.
like a real doomsday scenario.
Okay.
Trust in institutions is eroding.
Uh-huh.
People are worried about bank failures,
Yep.
currency devaluation,
Oh, wow.
the whole 9 yards.
The whole thing.
So how do our gold investors fare in this scenario?
This is where things get really interesting, I think.
Okay.
Because in a crisis like that, physical gold might really shine as the ultimate safe haven
Okay.
because it's tangible.
Yeah.
It's not dependent on any government or financial institution. And historically, it's held its value when other systems have crumbled.
Yeah, it's like that classic image of gold bars stacked in a vault.
Exactly.
Like the ultimate crisis commodity.
Yeah, when people lose faith in everything else, they turn to gold.
But even in this scenario,
Yeah.
wouldn't those logistical challenges
Absolutely.
become even more pronounced?
They would.
Like finding buyers, agreeing on prices?
It would be chaos.
Yeah.
It would be a logistical nightmare.
And then the security risks, too?
Oh, yeah. In a crisis, people are desperate. They might be more prone to theft.
So protecting your physical gold would be a huge concern.
A major concern.
Yeah. Okay, so physical gold has its advantages in extreme situations.
It does.
But it's not without its challenges.
Right. It's a trade-off.
Yeah, okay. So what about paper gold in this scenario?
Paper gold, well, it's really hard to predict with certainty how those investments would fare.
Okay.
It really depends on the nature of the crisis and how it impacts financial markets.
Okay.
But one major risk with paper gold is counterparty risk.
So you're talking about the possibility that the institution backing your investment could fail.
Could collapse.
And then you're left with nothing.
Potentially.
Yeah.
That's scary.
It is a scary thought.
So even if gold itself holds its value, the systems we use to access it can be vulnerable.
They can be, yeah.
Okay, so this has been really eye-opening. These hypothetical scenarios.
A good thought experiment.
Yeah, it's really helped to illustrate the different ways that these investments could play out.
So for our listener who's trying to make sense of all this, what's like the key takeaway?
I would say the key takeaway is that there are no guarantees.
Okay.
Especially during times of crisis.
Yeah.
The best approach is to really understand your own risk tolerance. Do your research thoroughly.
Okay.
And if needed, consult a financial advisor.
That's always good advice.
Always good advice.
Okay. But I want to end on a slightly less serious note.
Okay.
Okay. So putting yourself in our listeners' shoes.
Right.
If gold prices were skyrocketing because of some global event, which type of gold would you feel more secure holding?
Ooh, that's a tough one.
And why?
Let me think about that for a second. Okay, so if I had to choose, I think I'd probably lean towards a diversified portfolio of paper gold investments.
Really? So even with all the talk about counterparty risk and all that stuff,
yeah,
you'd still stick with the paper gold?
I think so, but hear me out.
Okay.
I would spread the risk across different types of paper gold. So a mix of ETFs tracking different parts of the market, maybe even some carefully selected gold mining stocks.
Okay.
You know, if the underlying company seemed really solid.
It was all about diversification.
Exactly. Diversification and also liquidity.
Okay.
You know, being able to access your funds quickly if you need to.
Right, because in a crisis situation, who knows what could happen?
Exactly. You need to be able to adapt.
Yeah.
And having that liquidity can be crucial.
So you're prioritizing flexibility.
Yeah, flexibility and access.
Okay, that makes sense.
Yeah.
What about you?
What about me?
Yeah, you were making a case for physical gold earlier.
I know, I was.
So have you changed your mind?
Well, honestly, I'm still a little torn.
Okay.
Emotionally, the idea of having that tangible asset, something
Yeah.
I could hold in my hand,
Right.
if the world went crazy, that's really appealing to me.
Right.
But I also recognize the challenges of owning physical gold in a
A
crisis.
liquidity, the
Yeah,
security. Yeah.
exactly.
It's a tough call.
It is a tough call.
Yeah, it seems like there's no easy answer.
No, there isn't.
It really depends on your individual circumstances
Absolutely.
and your risk tolerance.
Your priorities, your comfort level.
Yeah, exactly.
There's no right or wrong answer here.
That's what makes it so interesting.
It is fascinating.
Yeah. Well, listeners, there you have it.
That's our deep dive.
Our deep dive into the world of gold investing.
Physical versus paper.
We've covered a lot of ground today.
I hope it's been helpful.
We talked about the pros and cons of each approach.
And some hypothetical scenarios.
We even shared our own personal preferences.
It's a complex topic.
It is. But hopefully you've gained some valuable insights
I hope so.
to help you navigate this market.
And make informed decisions.
The key takeaway here is that there's no one-size-fits-all solution.
It's about finding what works best for you.
So do your research.
Talk to a financial advisor if you need to.
And most importantly, think about your own individual goals.
And your risk tolerance.
It's exactly. All right, so that's it for today's deep dive.
Thanks for listening, everyone.
We hope you enjoyed it, and we'll see you next time.